Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, October the 5th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our main hypotheses for the day. We create multiple hypotheses in order to have a plan in place for whatever the market gives us. We do not try to bend our trading to the market. We plan ahead so that whatever the market shows us, we have a plan intact. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There is no website, there's no blog, this is not a commercial venture. We do everything live here in the go-to during these pre-market sessions, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, let's get to the news. 8:15, we had ADP, non-farm employment change. Lower jobs were created than expected, 154 versus 166, and prior was 175. So a bit of a miss there, but market did not react unkindly to it. It went up and made a new Globex high off of the news. We had Canadian trade balance expected minus 2.5, came out at 1.9. U.S. trade balance expected 41.1, came out at 40.7. 9:45, we've got final services PMI. The big news will be the ISM non-manufacturing PMI and factory orders at 10 o'clock, and then crude at 10:30. We do have a number of speakers today. Cashcan is speaking, Lacker, and Evans, I believe, are all going to be speaking. So there's going to be, basically news. China's got a holiday today, so won't be seeing much from there. And of course, there's all kinds of other, presidential things that can come out still today in terms of headline news. Taking a look at the day yesterday, our main hypothesis was a rotation down to find buyers. Find buyers rotate up through into that 60.25. Secondary hypothesis was a failed breakout or a false breakout, and then a rotation down towards the 46, and possibly even come down towards the 40.25. Or 40.5, I should say, with a late date probe maybe down into the 29 area. We really had a rotational day. We were expecting a rotational day, but these moves here were very large and very sharp. 10 down, 9.5 up, 12.25 down, and 11.5. To me, this was positioning from mutual funds. You can see that OTF was active pretty much all day, and we just chopped around. It was a very bad environment for trying to trade, because you don't know where these turns are going to come from, and then they finally brought it down and created a double distribution, and we closed with the Depop shifting down to the 42.50. So let's just take a step back, and we'll do what I like to do every day. I start with a monthly, and I work my way down in time frames. I use a 9 EMA, 20 SMA, looking for slope and separation for the strength of the trend where it's being challenged or violated. Beautiful monthly trend for multi-years, challenged at the end of 15, beginning of 16, and since then we've taken it back. Now we are getting some weakness coming in here on the monthly. We had a bearish month in August and in September. So far we're below the open of October. We did come down and test the 9 in September, but bounced off of it. We do have a little bit of slope, a little bit of separation, but nothing really strong, but we do have a possibility of a continuation pattern on the monthly. On the weekly, we had those 8 weeks, which is only the third time in 20 years that that's happened, and then we took it back, came down, tested the 20, and now we're above the 9, but just sitting basically right on top of the 9 right now on the weekly, but more of a consolidation than a continuation pattern, but we still have not violated the trend by breaking below the 20 SMA at the 2132 area. Remember that last week's low was 32.75. This week's low is 36, so we do have a higher low on the week so far. Going to the daily, this is the symmetrical triangle we've been watching for a couple weeks. We had a bit of a false breakout here. I'm still thinking that the false breakout could lead to more downside, but we didn't close below the lower trend line, so it could be a false breakout and would be nothing for us to come up here and test that 2166 area. That's the other side of the balance that we're trading around right now. We have our microcomposite VPOC at 52.50, and the upper end of that balance is the CLVN at 2166, which is our key line in the sand. But basically consolidation on the daily. Moving down into the intraday, you can see that we still have this symmetrical triangle on the 4-hour, but you can see that we're in consolidation, but we're coming back up and testing above the 9 right now, and see how they come up and handle the 52.50 area, and that'll be a test of the 20 and back into balance in the microcomposite VPOC that starts at 711, and we'll take a look at that in a minute. But the overall trend right now on the 4-hour is consolidation. On the 1-hour, we had a pretty strong trend going throughout the RTH session, and then basically they consolidated, and now we're breaking out to the upside with a possible start of an upward trend on the 1-hour. On the 30-minute, same thing, and strong trend down, sideways consolidation in the Globex, and now we're breaking out to the upside. We do have a technical gap with a possible foobar Mr. Sneaky. This Mr. Sneaky will be completed in about 8 minutes. So a technical gap will bring us back into, I'd say, the 47, 48 range. But right now the trend is to the upside on the 30-minute. On the 15-minute, same thing. Excuse me. Same thing. You got a foobar Mr. Sneaky. A technical gap brings us back down into the technical gap fill. Will take us back down into the 48.25. So a little bit of weakness showing here on the 15-minute, but the trend itself is overall to the upside, and whether we get back below that 48 will determine whether or not we come down and get a bigger move down to the 45, 46 area. On the 5-minute, you can see we had the foobar Mr. Sneaky technical gap. I actually traded this, and we came down and tested the 9, closed the technical gap, and then we bounced. It came back down again and bounced again. So far they're holding the 9 EMA and looking for possible continuation. This could be a flagpole as well in terms of continuation. Taking a look at the big structure. So this is our current picture right here. This is the black outline is the current longer time frame microcomposite that runs from the 711. Somebody asked me yesterday why I don't include this breakout day, because this is the significant breakout candle, and this is what took us out of this balance here, and we broke out, and we did not come back to the 50% of this candle. If we come back to 50% of this candle, then I'll add it into the longer time frame microcomposite. But right now, I'm going back to the second gap up because of the fact that it's inside of the value of this microcomposite down here. The overall microcomposite VPOC, like I said, is at 5275. Sorry, I said 5250, 5275. This value area extends up to the 78 and down to the 44, and that 44 and a quarter is no longer going to be our key line in the sand. Reason being, it's only 5 points below. The new line in the sand is going to be the 38, and I'm going to extend it down to 36, the bottom of this the week. So expanding our weekly low will give us our key line in the sand and a bigger move down towards the microcosm VPOC down here. Why 36? Well, because it's below the 38.75, and puts us clearly inside of the value area, and we've got a nice target below last week's low at 32.75 with the bigger target down here at the 28.75 area. Currently right now we're in this distribution zone that centers around the longer term price acceptance. Probably not going to get away from this too quickly. The other side of that balance is the 59 with the 60, 50 CHVN and microcomposite VPOC, and then the key line in the sand above is still going to be the 66. Anything above 66, I'm looking for the move back up to where this microcomposite VPOC was, and it was up here at the 73, and there's a whole bunch of unfinished auction up there in the 70s. So take a look at the overnight. We had a pretty decent Gaussian distribution most of the night. We basically just chopped around in a pretty tight range, 6.25 points, and then we had a push up earlier this morning, came back, created this LVN at 47.25, and now we're creating an upper distribution, and we expanded the overnight high basically on that news up to 51.25, and now we're just chopping around this 49.50 HVN. Don't know if we'll have enough time to put in a shift in the VPOC. Most likely VPOC is going to remain down at the 44.50 area. So taking our numbers from overnight, our overnight low is down at the 41. Our overnight high, and again, we're close to the overnight high, and lately they've been taking out the overnight high, and putting in a new one just before the RTH open. That is the value area as well, so it is going to be a trade area, because if we break out of there, you got a nice target at 52.75 to get funded, but I'd be looking for a bigger move up into yesterday's HVN and the open up here in the 56 area. And then we've got the range high at 58.25 as a trade area, and targeting that 59 and 60.25, and then the key line in the sand remains the same at that 66. The overnight VPOC is at 44.50, which is basically just below our close. I'm sorry, just above our close. Our close was 44.25. Is that right? Hold on a second. Sorry, 44.75. So our Globex VPOC is just below the naked close. So we do have the LVN right here at 45.50. I'm going to be using that as a trade level as well. The LVN from the Globex at 47.50, you could use that, but I think you're better off to be safe and wait for the break of the LVN of the prior day range. And then we've got the the value area low from yesterday is almost down at the low. I'm going to be using the 36 up into the 37, and this is going to be my key line in the sand for the day. Now, most of you would probably say, why am I not using the CLVN and the key line in the sand at 44.25? Because we've been through it a couple times now, so it's being weakened. You can see that overnight we battled this for most of the Globex, and long-term price rejection became short-term price acceptance, with the fact that we've shifted to VPOC as we battled that area back and forth. So it's weakened. It's now become price acceptance on the shorter time frame. So I have to use something that's more definitive, and that's why I'm using the 36 and shifting the key line in the sand down, because it would be nothing for us to go down and hit that 44. And doesn't mean that we're going to move away from it that quickly, because it's our overnight VPOC as well. So those are the key levels. We've got 29.75. That doesn't give me much. Let me just see here for a second. 31.75. I'm going to be using 31.75 and targeting the 29. You can use 28.75 as well. And then the next big support area is going to be this 22. And below that, we've got the 1850. $16.75, and then of course the 13s, and then the big one, which would be the key support below at the 21.07. And then above us, everything remains the same. So those are the levels. Those are my trade zones, what I'm looking for guidance. We're currently in the upper Keltner channel, but we had a double Reiko reversal looking to come down into the 46 area. My main hypothesis is we're seeing some weakness. We've got a shift down in the VPOC. So my main hypothesis is an open auction in range, a push up, failure somewhere between the 52.75 and 51, and then come down, test the 45, take out the gap, fail, push through to our main target below, which is 42.50, and push through down to test the range low for 36, and possibly come down here into the 29 area. Our daily ATR is running 25.75, so off of the current Globex high of 21.51.25 minus the 25.78, our daily downside target shifts up to 25.50. And our off of the low overnight, our upside daily ATR is all the way up here at 78. So Hypo 1 is open auction in range, a push up, immediate push up, failure at the value area high or the CHVN or the what is the microcomposite VPOC, and then somewhere up here fail and then come down, find responsive buyers, come down, chop around at the LVN, and then push through to the 42, chop around in the lower distribution, testing the 36 with possible late day probe down into the 29. That's Hypo 1. Hypo 2 is open auction in range, a move down to close the gap close the VPOC and the naked VPOC, take out the overnight low, and then somewhere down here between the 42 and the 36 find responsive buyers, and then rotate us back up through up to value area high, chop around here, and then push up into the 2060 and chop at the high of the range yesterday with possible late date probe up into the 66 and maybe expansion into start taking out some of these naked VPOCs and naked closes. So hypo 2 is open auction in range, move down, take out the naked close, naked VPOC and overnight low, and then find responsive buyers somewhere in the lower distribution, holding the low from the prior day, and then rotating up through value, testing the value area high, and then a push up into our main target for hypo 2, which is going to be the 60 and a quarter, and a possible late date probe up into the 68-70 area. That is hypo 2. Hypo 3 is a open auction in range, come down, find buyers between the 45 and 42, push through, get a strong move up into the 60 and a quarter, chop around, come up and test the 66.75, and then break above the wedge, remember the symmetrical triangle upper on the daily upper line is up here in the 66 range, and then a push through up into the 78 and the 83. Our weekly ATR is 48,975, so off of the bottom of the week of 36, we have a weekly ATR upside target at 2186, and currently off of the high of the month, which is 64, week, our downside daily ATR target, our weekly ATR target is 2115 and a quarter. So hypo 4, hypo 3 takes us up into this 78 and 83 area and testing those highs. And then hypo 4 is failure to break out of value, find responsive sellers, push through, down, test the low of the prior day in the key line in the sand, and then push through, taking out the daily ATR and coming all the way down into this 1850 area down here between 1850 and 13. So those are my 4 main hypotheses. Gold, I put in that there is a cup and handle on gold right now. It has not been violated, although it had a false breakout so far. Let me just bring it up. Come on. Well, it's not going to let me do that. I don't know why. Okay, there we go. So here's the cup, here's the handle. We did break the right rim. We didn't make it to our first target, and then they sold it off, and we're coming down. This will remain valid until we get below the 72.60. And again, this setup, you could have got longer with the break of the zero line and at least got funded, but it's come back. And now we have to, consider, I don't want to do that. We have to consider the fact that we still have that microcomposite VPOC, or composite VPOC, that goes all the way back to the 2008 down here at 1245.40. I don't think we're going to do it all in 2 days. That's why I was looking for a 10-handle bounce last night. I told you guys I was looking for that 10-handle move. We did get the 10.4. I did take the trade from 70.80 and got a little bit, didn't get enough of it. And anyway, we're still going to be pulled down into this magnet as long as we hold below this 88.90. That's going to be our key line in the sand above. If we get above 88.90, then I think they're going to try for the 1300s, and then we have to see if they can hold or whether they fail off of the 1300. Anyway, that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.